Manchester United is up for sale, or at least the Glazers are open to offers. So we'd like to take a look at how the Glazers have done business with a football club. Having read one article following the announcement that Manchester United was potentially up for sale, it was described like Disneyland being put up for sale. Now, what does that mean? It means that a club of such prestige isn't often put up for sale. But what we've seen with the sale of Chelsea, which has been forced by the UK government, and with FSG potentially looking to sell part or all of Liverpool Football Club, followed quickly by an announcement in the wake of the Cristiano Ronaldo interview and the subsequent release of Cristiano Ronaldo from his contract, the Manchester United owners have said that they would be willing to sell the club, either in whole or again in part. There have been some wild valuations, potentially up to $8 billion. But the way that the Glazers have done business with Manchester United has been nothing short of controversial. From the initial acquisition with a leveraged buyout, which in the world of business, or even when it comes to your own mortgage, is not unusual in the slightest. A leveraged buyout is essentially using somebody else's money in the form of debt to help you purchase an asset. Everybody does this when it comes to a mortgage. We put a deposit down, which equates to a percentage of the purchase price, and we go to the bank to say, can you make the difference up and transfer the cash to the vendor, and you acquire the property. And this is nothing different to what the Glazers did. They put a significant sum down in the form of equity, and the rest they financed through debt. The problem that the fans had is that that debt was secured against the club, and the club has essentially footed the bill for the interest cost, which has been significant. The debt currently stands at $650 million and isn't hedged, which means that there's a financial risk to the club when it comes to report its figures to UEFA or to the market in sterling. But the Glazers will see a significant financial return, which could be tenfold that of the initial investment if we include the debt. They've also extracted hundreds of millions of dollars in the form of interest and in the form of dividends. And they will have already partially recouped their initial equity investment. So from their perspective, the way that they've run the club, they may see that the value is now at a peak. But what does that valuation look like? There's a few ways that we can look at it. You can look at the net assets, which are way below that of the market capitalization, and that sits below the potential sales price. When you're looking at controlling any entity, it comes at a premium. So the market capitalization being the share price times by the number of shares available on the market sits at around about $3 billion. It's safe to say that Manchester United will probably be sold in its entirety for $5 billion at a minimum. And that's really gauging the price of recent transactions, with Chelsea being the most recent one. We could also look at a potential sales price against Liverpool. But the way Liverpool and Manchester United have been run over the past decade is significantly different. Manchester United has been run very clearly to me as a business. Cristiano Ronaldo commented that very little had changed since his 2 stints at the club. The Glazers have very much taken a private equity approach to the football club, but potentially stretch that out over a longer period than that of a usual private equity investor. They've used their own funds and debt to get a return on their investment of, let's say, an estimated 10 times. Now that is a fantastic financial return. People will have their opinions on the state of the football that's being played over the 10-year period. People will also express their opinions on the state of the stadium and the current playing squad. The expectation from the fans is that Manchester United will compete in every single competition and have a chance of winning it, if not winning all of those competitions. And that comes from the historical performance, largely attributed to the time under Sir Alex Ferguson, where on-pitch performance was contributing towards the financial success, which could then contribute to the football performance, where the funds were reinvested. Presently, that's not the case. We have seen some investment in the squad, but the primary reason for the Glazers holding Manchester United is for a financial return. But how long can this continue? Dividends, for example, are reliant on retained earnings, distributable reserves. And if a club continues to make losses, as we've seen in recent years, Manchester United's distributable reserves will diminish, and they will be in a position which most football clubs find themselves in, and not be able to pay a dividend to their owners, whether they're listed or privately owned. The concept of dividends being paid out by football clubs is quite rare. It's usual that the funds are flowing in the opposite direction. The losses that are largely made across the football industry need to be funded, and those funds tend to come in the form of equity as a result of the financial fair play regulations that are in place across multiple leagues. Those regulations say that if football clubs make losses, it's up to the owner to put their hand in their pocket to make good those losses. But Manchester United have been able to live on their historical performance off the pitch, and that has allowed dividends to be paid up to 2022. Now, the Glazers have decided not to pay a dividend in 2023. There's likely to be a whole host of reasons why that's the case, but one of the primary reasons will be this. Under the UEFA Financial Fair Play regulations, now known as the Financial Sustainability Regulations, dividends are treated as an expense, which might not make sense to many of the accountants out there. But UEFA look at a concept called football earnings, relevant income against relevant expenses. A relevant expense from UEFA's perspective is a dividend. The way financial fair play regulations have been historically and presently written is to protect the equity of a football club. And that will be to increase the share capital or capital contributions and not extract funds. So clubs are punished by extracting funds in the form of a dividend. So by not paying a dividend in 2023, Manchester United have the ability to potentially make a greater loss. I'm not saying that that will be the case, but if on-pitch performance isn't necessarily what they predict, there will be greater flexibility there if dividends are not declared. Assuming there will be a full takeover, what will the new ownership strategy be? If we look at that of Liverpool, FSG has been able to create a club that's been able to compete on the pitch domestically and in European competitions to the highest level, and that's without taking any dividend out or contributing significant amounts in. Since the acquisition of Liverpool by FSG, there's been a £3 million capital contribution into the club. That's nothing. But the profits have been reinvested into the club, into the squad, and have built what Jurgen Klopp has been able to build, and that has reaped rewards off the pitch. But the two strategies couldn't be more different. One, on the Manchester United side, the owners have extracted funds in the form of interest and through dividends, whereas FSG have been able to operate the club and reinvest any profits over that period back into the squad, and you can see a significant difference in the on-pitch performance of both clubs. So there are two differing strategies from an ownership perspective, one being very much financially focused and the other one being more football focused. But you could argue that the Liverpool strategy has ticked the box from the footballing requirements as well as the financial requirements. And building that sustainable football and finance model is something that is a challenge for all clubs. And often it's difficult for a club to strike that balance, being not investing too much in the squad and potentially allowing funds that are generated by on-pitch success to be reinvested. What are your thoughts around the sale of Manchester United and potentially Liverpool, and the way that the two clubs have been run over the last decade or so? Leave your thoughts in the comments below. If you liked the video, hit like and subscribe for more. My name's Neil Wood and I'm a football finance professional.